Welcome. We're back. Crazy week, crazy day. Right now trades are about as bad as it can get. It's been very, very rough. Before I even get into like all the charts and everything, just want to say thank you. I just said it, but I'll say it again. It's just been rough. That's the easiest way to put it. I have a trading style which is primarily swinging growth stocks and mid caps. And this whole entire month, those types of stocks have just been getting crushed. And the trades have been L's pretty much this whole entire week. That's just a part of trading. Personally, like I'm not mad or sad about anything. It's just like, there is a lot of pressure when you're putting out ideas, in the public. But to see like the support this week has been crazy, because there's been weeks in the past where trades weren't doing so well, and I wouldn't say I was getting hate, but like a lot of people would be complaining and it just wasn't a great environment. But this week, like despite everything that's been horrible, like there's been a little bit of hate that I'm not going to even bring up because there's no point, but like 99% of it, like I've gotten so many messages like saying to keep head up and everything. Shout out to all the people who always support me. You know who you are. Let's get into the stream though. We have a lot to talk about. We're going to look at Bitcoin while people are hopping into the stream like we usually do. And for right now on Bitcoin, it's actually might be developing some triple classic bullish divergence on the 4-hour now, which is pretty interesting. Still in this falling wedge. It looks okay for right now, still above 30k. As long as it stays above this demand line, or really as long as it stays above 30k, which is not too far under the current price, it looks fine to me. I wouldn't say it looks bullish, it just doesn't look like it's the end of the world for right now. So hopefully it stays like that. We're gonna move over to stocks. We're gonna probably do a 20-minute breakdown on the stock market today. I have a lot to talk about. I have a lot of thoughts on the market. I was looking at I didn't really look at that many actual individual names today, apart from Clover and Neo and a couple other things. But mainly I was just looking at the indices. During the day, I was looking at the S&P and the NASDAQ and the ARK ETF and the Russell 2000. That's what I spent most of the day looking at. And I definitely have some opinions about how things are looking, which I'm about to bring up. For right now, though, we had a very red day. Every single major index was red. The S&P was down 1/3%. The NASDAQ was down 3/4%. Overnight, futures are also currently down about 0.30%. So, red across the board for crypto as well. I think even gold might have been down for a little bit. So just all around another red day. Even before I really get into things, just like my overall, like intro to what I'm about to be talking about is, I think large cap tech stocks can continue the pullback that they've seen over pretty much just yesterday and today. But I do think that small caps and mid cap growth stocks are at areas for, I'm not saying like actual like real crazy reversals, but at least an area where they can bounce. I'm gonna go over the charts and talk about why I think that. But yeah, I'm gonna go over the market for about 10-15 minutes. Then we're gonna talk about Clover, AMC, and a couple other tickers that I want to bring up. And then in about probably 25 minutes, we'll do ticker requests. But for the next 25 minutes, there's a lot I need to break down. So make sure to hit that like button, hit that subscribe button. Let me see if I missed anything in the chat before I get into this breakdown. Good job, Gold Miner, with that 215 idea for the Russell. Tito says, can you give your opinion on CLOV adoptions for tomorrow? We'll take a look at Clover in about 10-15 minutes. We're going to look at Clover and AMC. What else we got? Oh, you said options. All right. Risk management. All right. So looking at the market, before we even get into it, there's been a couple times this year that we've had pretty red streaks. The 2 days that stick out the most to me are March 5th and May 11th. March 5th was when the S&P 500 was down 6% in about 2 weeks. It was right over here. That was March 5th. If you look at a lot of different stocks, a lot of stocks found local bottoms on March 5th. Like if we go over to Clover, March 5th was all-time lows for Clover. It was this day right over here. I put out a trade alert on Clover that day on March 5th. It's on my trading view page. That was the lowest level Clover's ever been at. March 5th is the first date. The second date is May 11th. Not every stock really bottomed on May 11th, but a lot of growth and tech stocks bottomed around May 11th to the 13th, if you could see around right over here. And if you remember, from the end of April to the beginning of May, the NASDAQ corrected 9% in like 2 or 3 weeks. It was pretty rough at the start of May. But then we got a lot of bullish variables. I did a stream on May 11th, which was this stream right over here. The title was Growth Stocks Primed for a Comeback, ? And I pretty much spent that stream for about half an hour talking about how all of these EVs and pot stocks and mid caps and even some tech names looked really, really bullish to me. They had major harmonic patterns and divergence and all the things I look for. And that week was pretty much the bottom for the NASDAQ. And what happened after that week? Well, we had a really good second half of May. We had a really good June, and the NASDAQ went up about 14% in 2 months, which is insane. That's not a typical amount for the NASDAQ to go up. That's very, very good. And now we're seeing a little bit of a pullback. Even on Twitter and in the Discord, if you're in the Discord, on those days, I was talking about how I felt that things were at potential reversal areas, right? So this tweet went out on March 5th when the S&P was at the bottom of the wedge. And then on May 11th, like we were just talking about, when the NASDAQ was down over here in this area, the date of this tweet was May 11th, and I was looking for the reversal areas. And, on March 5th and May 11th, and why I'm bringing up these dates again is not because I'm trying to be like, oh, I called the last 2 bottoms. That's not why I'm bringing it up. Why I'm bringing it up is because I'm seeing a lot of similar formations to what I saw on March 5th and March 11th. Not necessarily on the S&P 500 and the NASDAQ, but on the Russell and the ARK ETF. Now, that's the interesting part. I think the S&P 500 and the NASDAQ both short-term are looking a little bit weird. They both have bearish divergence. So I'm not really focused on those. I'm kind of more focused on the Russell 2000 small cap index, as well as the ARK ETF, which tracks a lot of growth innovation stocks. And I'm going to look at those charts in a second here, but it's times like these when there's a lot of pain and fear in the market that you could find opportunity. Back on May 11th, which was this day over here, when I did this stream, when pretty much everything was bottoming and I was like screaming out, oh my gosh, all these charts look bullish. There was like 10 to 15 people watching me live. Even tonight, there's about 30 people, which is pretty good. Usually we're around 45. Maybe we'll get there, maybe we won't. So again, that's like another indicator. The overall sentiment in the market, there's a lot of fear. I'm sure you keep hearing the word inflation, and there definitely are concerns for the market. We also had, I think, some news come out today about a mask mandate coming back into effect for California potentially. Obviously, everything with the Delta variant. So there's definitely concerns. We also have earnings coming up in about really a week as one of the big ones start coming out. So, looking at the market and how I feel about the market, we're just going to look at the charts, and I'm going to tell you everything that I'm looking at and why the stream is titled Why I Think We May Get a Reversal. Now, the NASDAQ, in terms of textbook technicals, in the short term, it's not looking too good, and that's fine. It just had a crazy run. Now it has actually broken a demand line of this upsloping channel. It's broken it to the downside. There's triple classic bearish divergence on the 4-hour, and there's classic bearish divergence on the daily time frame on both oscillators. So it's looking a little bit overbought, and that's why you're seeing this pullback currently. So I do think that the NASDAQ can come back down to 14,190, 14,180, which is only about 2% lower, to retest the previous breakout point. So that's what I'm looking on the NASDAQ. Now, if we go to the S&P 500, I'm a little bit more neutral on the S&P. There's not much bearish divergence on the daily, but it is there on the 4-hour, just a little bit. And you are kind of rolling over a little bit. You also have a bunch of downside gaps to fill. So the NASDAQ and the S&P, I don't think there's bullish technicals on them in the short term. Obviously, the long-term trends are still good. But really, when we move over to the Russell 2000 and the ARK is where I'm seeing some interesting variables. And it's very simple. Just like I'm sure you remember, when the S&P was at the bottom of the wedge on March 5th, when I was, going crazy saying I think the market's going to bounce, there wasn't that many variables. It was just at an area where it kind of made sense to see a potential bounce. So now looking at the Russell 2000 and the ARK, I'm seeing the same setups. And I was talking about this earlier in the Discord today. I put out like a quick thread on Twitter about what I was seeing, and I'm going to kind of explain it in depth now. But before I even get into that, basically from what I'm looking at is, I think Small caps and growth stocks can bounce, but I think large cap tech stocks might see turbulence for the next couple of weeks until earnings, and then earnings can go either way. But looking at the Russell 2000 versus small cap index, you have a potential for classic bearish divergence on the 4-hour. You bounced off a very important demand line today. You also had your first green 4-hour candle since June 12th in about 3 days. And on the daily, you definitely bounced quite nicely or quite heavily off the lows. So as long as the Russell can continue to hold above its demand line, I think small caps have a good chance of bouncing back. We saw a pretty good, couple hours to finish off the day for small caps. A lot of them bounced. Clover went from like 790. I think the low of today was 795, and it went all the way up to like $8.40 after hours. I mean, and that's not really a small cap, it's more of like a mid cap, but a lot of things had nice bounces. So looking at the Russell, it's all about that demand line. And then also if we go down to, I believe it is the 4-hour chart, your RSI was slightly oversold today. The last time the RSI on the Russell was oversold was May 12th. What happened then? Did not mean to do that. What is it doing? All right, so the last time you oversold is right over here. The last time the Russell was oversold in the 4-hour, it went up about 10% in a month. So it is really interesting. Even if we look at it like this, you kind of have an XABCD on the 4-hour as well. It's not really a textbook harmonic, but you definitely are at the 886. It's kind of close to a bullish bat. The C point is a little bit high and the B point's a bit low. But you went down to the 886 and that was almost where you bounced off today. So very scuffed XABCD formation on the Russell. Then if we go over to the ARK ETF, which tracks a lot of mid-cap growth stocks and innovation names, take a look at this $115 level. It was your high on June 16th, 3-day resistance at the beginning of June, candle high on May 28th, candle high on May 5th, 2-day resistance at the end of March, and today you roughly bounced off of that area. Also, if we go on the 1-hour for the ARK ETF, you had a bullish hammer candle, you have 1-hour classic bullish divergence, you have an oversold RSI, and you had your first 2 green candles on the 1-hour in like 15 candles. There was like 15 red candles in a row. Then you got a hammer candle, which I literally talked about the second it was forming. I shared it in the Discord saying I'm looking at this to potentially hammer over 115. That would be a good sign. You got that hammer candle, and then you had 2 follow through candles after that, which is pretty good price action. The green squiggly line is the 200-day moving average, which it actually did break under, which is a good point. That is a little bit of a concern. It has used this as resistance in the past, as you can see, so it might use it as resistance if it tests it again. But these are not the ARK and the Russell are not the most bullish charts in the world by any means. They don't have a lot of divergence on high time frames. They don't have major patterns, but they are at important levels. And all that means is not necessarily that small caps and mid caps are going to bounce 100%, but that there's a way for you to continue to manage your risk. Because for the last 2 weeks, they've been pretty unclear. I haven't really been saying I'm necessarily like looking at bullish variables on them. I've just kind of been like, they're selling off pretty heavily. We'll see what happens. But now we're at places where you can easily tell if, this downtrend can continue if you break these important levels or not. So, the IWM being at this demand line is kind of the equivalent to when the S&P 500 was at the bottom of the wedge on March 5th. So that's really what I'm looking at. There's no way to know for sure if we're going to see a rotation from large cap tech back on over into mid caps and small caps. But if you just look at the charts, you can see that it's pretty easy to finally tell what the Russell and the ARK are going to look like in the coming days, because you have very clear levels right under you. And then on the opposite side, you have very clear bearish divergence on the NASDAQ. So the main point that I'm trying to get at here is, in my opinion, it's going to be a lot easier to read the market. Finally, I think on Sunday night stream or something, last week I was saying like every single night. Last week I was saying this is the most confused I've been since I've started trading. I said that, for a few nights in a row, but now finally I'm starting to see levels that I can kind of line up with swing trades and just, work together with, because, for the last week or so of me putting out swings, even the last 2 weeks, this whole entire month, it's like I've just been looking at bullish charts, but none of the technicals have played out because the macro sectors are all just red. But now finally I can also look at the sectors. Okay, So we have 38 people in here. Please remember these levels, screenshot them. It's very easy to see how small caps and mid caps can potentially do if you just watch those levels. That's really it. And that's important. That's not just me trying to be neutral. That's a very important thing if you're a bull. You want to have clear levels rather than just being in the middle of nowhere like the NASDAQ currently is on low time frames. AS asks a good question. Is it good to swing trade ARK ETFs? They do give decent returns when they're doing well compared to the broader indices. Like typically the ARK will be a little bit more volatile than the S&P 500 or the NASDAQ. Like for an example, today the ARK was down 1.5%, but the NASDAQ was only down 0.70%. So it's just a little bit more volatile, which could be good or bad. Like on a day like today, bad. But on a day that's very green, it could be better. It could go up higher than those. So it just depends on how you're looking at it. But I really do think that we're finally, after 2 weeks of very aggressive selling, getting to an area where it makes sense to bounce off of. And the simplest way to just look at that is the RSIs, right? We go down to the 1 hour RSI. We look at the ARK ETF. The last time the RSI came down to these levels was May, the beginning of May. What happened? It bottomed out and it went on a crazy run. So finally, things are getting a little bit more clear. And I've been waiting on that for 2 weeks, and it's affected a lot of the trades. And I just want to talk about it because it was kind of very interesting to see this happening intraday, and then we actually bounced off the levels I was looking at, which was a little bit of more confirmation. So going into tomorrow, I know futures are red right now. Even if we have a bad open tomorrow, I'm just going to be watching these levels. We break these levels tomorrow morning, all right, maybe it takes a couple more weeks. We continue to hold above these levels, maybe we start looking at individual stocks again and seeing some more confirmation. So I'm very happy we have over 30 people in the stream, because last time I was talking about the market like this was, I took out the tab, was May 11th. There was like nobody here, and that's when pretty much like 90% of things that I trade were bottoming. And I don't know if this is the bottom. I don't call things. That's not what I do. I'm not trying to call a bottom. I'm just saying that there's levels you can easily watch to manage your risk, which is very good, because for the last 2 weeks, it's been a lot harder to do that. All right, so that's the market analysis. Hopefully that gave you some sort of direction. 115 on the ARK ETF, watch that tomorrow. And then this demand line on the Russell 2000, watch that tomorrow. So yeah, other than that, futures still red, bouncing up a little bit right now. We'll probably talk about Clover and AMC next. We gotta talk about Clover for a second here as well. So Clover trade idea failed. Second one in the last, well, pretty much this month. I put out 2 swing trade ideas on Clover. Neither of them worked out. Clover hit the lowest level today that it's seen since June 2nd. Clover has fallen from $28 down to $9. You know, this is a I can't even do it like that. It's a lot. Clover from the highs in the beginning of June to the lowest today has fallen roughly 70%. I didn't put out any trades over here, anything over here, anything over here. I put out the first trade around $12, I believe, right under 12. It must have been like a 5 or 6% loss. And then this trade was an 8% loss. So you combine the two, 13 to 14% loss on Clover after it just fell 71%. It's still bad, but it's not 70%, right? So in terms of risk management, it's not the end of the world, but obviously it wasn't profit and it was a loss. You know, it's really tough. I've had a really, really good streak trading Clover options in the past 2 months. If you know, I don't know if there's any premium members in the chat, but I was looking at the weekly sheet that I share with premium members, and I looked at all the options trades on it. The last 10 options ideas I've shared about Clover for premium members, 8 of them have been winners. So I'm 8 for 10 on Clover options in the last 2 months, but the last 2 swing trades didn't work out. So, you know, really the way I'm looking at it, it's like I have a pretty good way to trade Clover options. Just looking at low time frames, it's worked out pretty well. We've had a lot of wins. I mean, this week alone, we made 60% on Monday and we made 20% today. Potentially more. We'll see what it does tomorrow. But the swings aren't working. So really the thing here with Clover is like the low time frame technicals work pretty well on Clover on low time frames, but On the higher time frames, really Clover for right now is just, it's not getting enough price action for a swing trade, and I hope that changes soon. But really every single bounce it seems in the last month has been sold off. Every single bounce has been sold off. So how can you go long on something where every time it bounces, within a couple of days it creates a new low? That's all Clover's done for the past month. So I've tried my best with this one. It was a failure. I never shy away from failure. I try and talk about it. I try and bring it up so we can learn from it. So I don't know, maybe Clover bottomed out today, the same day got stopped out, and now it runs to the targets. That would suck, but also it's possible. All that really happened today from a technical standpoint on Clover was it just dropped. That's it. You still have daily hidden bullish divergence developing. You still have 4-hour hidden bullish divergence developing. You're still oversold on the RSI. Every other time you were oversold on the 4-hour RSI, you had a major bounce on Clover. The last time you were oversold, you went from $8 to $28. I think it also had a bullish pin bar on the 4-hour. The technicals on high time frames still look good on Clover, but the price action is not looking good, right? It's continuing to make new lows every single day. So, you know, moving forward with Clover, between $7 and $10, I'm probably not going to be putting out any swings on it. Just look at the statistics. I'm 8 for 10 trading options on Clover for the last 2 months. I'm 0 for 2 trading or trying to swing trade Clover this month. So I'm just going to go with the probability like I always do. If Clover can reclaim above 10, maybe I'll put out a swing trade then. If Clover comes down to 7, maybe I'll put out a swing trade then. But everything in between, I don't want to, you know, go too far. So, you know, and that's not me saying I'm bearish. The technicals are still bullish. It's got stopped out. The stop level I had, it broke the stop like any other trade. That's it for the trade that I put out. You know, I'm just following my system. And the system's not perfect, and that's obvious this week, but the system over time creates results if you can take your emotions out of things and just play the levels. So this one hurts quite a bit. You know, I really never get, I'm not even emotional about this, but I never really care. I wouldn't say that. I obviously care when things get stopped out, but it's not like I'm like, damn, that sucked. What am I gonna do now? Every other time something gets stopped out, I'm like, all right, we'll make it back somewhere else. We always do. But this one, it was like, I know I've been talking about Clover every single night for the past 2 weeks. I really believed in it, but again, like I always say, your emotions mean nothing. And the trade idea I had just didn't play out. You know, you have a mixture of an extremely red market for growth stocks, a heavily shorted stock. I'm not going to say anything about manipulation. That's not really my world, but other people are saying so. You had the CFO, I think, leaving today in the morning, which is why it gapped, or it was down like 5% pre-market. It bounced in the beginning of the day and then it just fell again. And you just have a float that's full of bag holders. So I've tried my best with Clover. It's just every single bounce has gotten sold off for the last month. It's just like, it's very weird. I'm kind of stressed about it because I still see so many bullish technicals, but I don't want to put out a new swing trade on the same ticker every single week. I'm not trying to, you know, let something get the better of my emotions. But again, I can see this thing going crazy any day. I think any day it's possible to wake up and see Clover up 30-40%. There's a gamma squeeze potential if you look at the options chain. There's a short squeeze potential if you look at the short interest. There's bullish technicals on every single time frame. You know, there's so many things lined up. It's just the demand is not there for right now. And eventually it will come around. I just don't know when. And moving forward, until we either get above 10 or fall down to 7, I'm just going to stick to doing short-term options on Clover because that's where I find the most success. All right, so that's really the recap of Clover, me breaking down everything. And yeah, in terms of the technicals, this $8.20 level, I like that it closed above it today. It was a candle high on May 28th. It was a 2-day resistance on the 11th and 12th of May. It was a 4-day support from March 17th, or really a 3-day support in the middle of March. So 820 is the current level on Clover. It didn't really use that level as support today, but it did close above it. Really though, like if you take out this 820 level, the biggest the closest huge support is $7. I'm not saying it's going to go to $7, but that's the next major support. The main thing on Clover, this, like I saw last night, I don't really know, but the major thing on Clover is the oscillators. The oscillators are still pretty bullish on Clover. So really it's like I still truly do believe Clover can see a nice bounce. I still am in Clover. That doesn't mean you should be. It's just, it got stopped out. Every time I put out a trade, I put a stop loss level, and that level got hit today for this one. So we'll see what the future holds. I'm still going to, try my best to continue getting a lot of gains on this in short-term options like I have been doing for the past 2 months, but it's just not really a swing trader's stock right now. It's more of a day trader's stock or a potential long-term investment, not financial advice. But for a swing trade right now, it's just not the best float. There's too many bag holders, too many shorts, and too much of a red growth market this month. But hopefully things change. That's really all I'm going to talk about Clover. I just kind of wanted to, give a good amount of time to this one because I know I've already talked about it so much this month already, and it didn't work out. And I'm not I'm not a person where if something doesn't work out, I just go and look at other things and act like nothing happened. When something doesn't work out, I talk about it more. I try and learn from it, and I take accountability. So yeah, that's Clover. I'm still bullish on it, but it hit the stop level. So you do what you want, and I'm going to stick to what I do best with Clover, which is day trading it with options. That's my bread and butter with this name. Made so much profit on it, literally on this downtrend. Getting in the morning, buying calls, selling it in the first hour of the day, letting it bleed on low volume, doing the same thing the next day. Like, that's really what I've been doing best with Clover. So I'm going to stick to that until I see more life in it for a long-term or a midterm move. All right, let's move on to AMC now. Let me see what else I haven't looked at the chat in a minute, so I know there's a lot I gotta look at, I think. What else? AMC was up after hours. Let me see what it went up to. AMC it closed after hours at $38.10, which is pretty good. That's an important, anything above 36 is really interesting on AMC. What else we got in the chat? Rev says, made it to my first live, started watching your videos every night, appreciate it. Medi says, shout out to Champ showing up every day, red, green, or neutral day. He's still here streaming, updating, and throwing out the plays. Appreciate that, Medi. How you doing, Sonny? Brad says, I've had some terrible luck in the past week. Been stopped on so many great plays, mainly puts that ended up running like crazy after. I'm not complaining though, better safe than sorry. Yeah, it's just been a very weird market this month compared to what we saw in May and June. But finally, like we were talking about earlier in the stream, now we're starting to see some clearer signals, which we could, again, it doesn't mean things are going to go for sure, but it just means it's going to be a lot easier to manage risk. Dave says, where did you learn to trade? I mean, honestly, I always talk about Mitch Ray, but the biggest person I learned from was Mitch Ray, who's another person on YouTube who has a very similar stream to mine. I've taken a lot of knowledge from Mitch Ray just watching his streams for the last 2 years. I think maybe 2.5 years, I don't know, but even before I was old enough to trade, I've been watching him stream because I was interested in Bitcoin. So yeah, Mitch Ray, look him up on YouTube. He's like, if you think I'm good with technicals, he's like 3 times better. So I just take what I learned from him, and I always try and give him credit because I would not be streaming if I didn't watch Mitch Ray's stream. So that's the reason I'm here. And also, a bunch of other resources. What else was I gonna say? Just reading a lot of different books from just legends and technical analysis, watching a lot of lectures from Mark Douglas. There's so many people that have definitely taught, not me directly, but have put out content that I've watched and stuff. And then obviously the biggest teacher, experience, just really dedicating my life to this for the past 1.5 years, or not really, only 1 year. Just literally the last year of my life has just been 10 to 12 hours a day of stocks and crypto at first. Still a little bit of crypto, but not too much. So it's really like, it just became my life. And if there's anything you do, if there's any craft you have, if you put in 10 to 12 hours of your time into any craft, chances are you're going to get pretty decent at it in not too long. It's all about how much dedication you have to whatever you're doing. So, the biggest teacher is just experience and time. But definitely the main other source that I learned all these technicals from in swing trading was Mitch Ray. Dave says, "You're the man. Your videos are so informative, not biased. Learning a lot from watching. Appreciate that." Rev says, "Can you do a quick RSI divergence and Fibonacci lesson?" I have a video on Fibonacci in my free course on my channel, and I also have a video on RSI divergence. They're both in the course, and they probably gonna take me like 10 minutes to go over. I mean, RSI divergence is, just to put it simply, is when the RSI is doing the opposite thing as the price. So if we take a look at Clover, you can see, does this one? That's not a great example. What is something? All right, look at Neo for an example. So you can see Neo made a slightly lower low from this low over here to the low over here, slightly lower low. While it made that lower low, the RSI made a higher low. If you match up this first low, if you look at the RSI where it was, and then you match it up to the second low and you look at the RSI where it was, it made a higher low. So divergence is just when an oscillator, like your MACD or RSI, is doing the opposite thing as price. But again, there's a lot more that goes into it, and that was probably a pretty bad explanation. So go to the free course on my channel. The Fibonacci video is number 4, and then the MACD and RSI video is number 8 in the free course on my channel. And yeah, you can, they're much better videos than me just trying to talk about it right now. What program are you using for charting? Says Dave. TradingView. I'm not sponsored by them, but I use their platform probably 7 or 8 hours every single day. Scrooge says, in my opinion, these red days are the most important days to be here learning. Absolutely. I'm really, really happy to see 45 people in here, because these are the important days. You know, pain brings opportunity, and this is how you can learn the best. You don't learn nearly as much from wins than you do from losses. Yeah, so let's just talk about AMC really quickly. AMC has been getting demolished for the past three or 4 weeks. Today it bounced. It was up 8% during the day, and then it went up. It went all the way up to 38 after hours. I think even a little bit higher at one point. So right now it's up to like right over here is where AMC went up to after hours. So assuming, and AMC is probably going to be a little bit volatile pre-market, but assuming AMC opened right at 38 tomorrow, your resistance will be $38.67. It was your low on July 8th. It was your low on July 13th. It was your open on July 14th. So 38.67 is your closest resistance on AMC. I think it went a little bit higher than that after hours, but it did close under it. And then your major support is $36. 36 is a previous all-time high from 2015 and 2017. 36, in my opinion, is the most important level on the chart. We made 60% profit in 1 hour, I think yesterday, playing AMC calls. This candle, these two candles right here, this right here. I gave out an options ID to premium members at, I think, $34, and 36 was the resistance. And that's what we played. And we made 60% in calls in 1 hour when AMC was down 15%. So it was down 15% yesterday, and we made 60% on calls, which is weird, but it worked out. You know, I was just looking at a very simple level, and there was good things on the low time frames. Also did fill a gap, and the gap fill, we talked about this last night for AMC. The gap fill actually did hold as support. If you can see the open today, 32.20, that was pretty much the close from June 1st. So if we go down to the 1 hour chart, look at this. This area right over here, right, where it gapped up from, that was essentially around the support on the 1 hour, and it did kind of fill it on the daily as well. So that's where this all started. And yeah, it's bouncing. It was oversold on low time frames. I don't know if I'd call this a dead cat bounce, but you know, if you go on high time frames, there still isn't much of any pattern for AMC. But look at that, you have waning negative momentum on AMC on the daily, which eventually, if somehow the MACD can, you know, get back over to green, you can have hidden bullish divergence on the daily. The last time AMC had hidden bullish divergence on the daily was over here when it was down at $6, $5. It had hidden bullish divergence on the daily at $5. Right when it confirmed is when it went from $6 to $14 in about 2 or 3 weeks. So that hidden bullish divergence is real. It's very important, but it's not really anywhere close to being confirmed right now on the daily. And on the 4-hour, I don't know if you still can. Actually, you can. You can also have hidden bullish divergence on the 4-hour, which was the same exact thing as over here. I already have it charted. But literally, I was streaming back here in February saying AMC has hidden bullish divergence on the 4-hour and daily. And everybody, and a lot of people were like, nah, it was a pump and dump. It went from 2 to 20 and came back down to 5. But it had the hidden bullish divergence, and eventually it saw 70. But yeah, that's pretty much it for AMC. Those are your levels. We'll see what happens tomorrow. MMAT, this trade's down like 5% or something, I think. A lot of things just pulled back today, but not a lot of technical damage, which is good. This MMAT is still developing hidden bullish divergence on the daily, and it's still nearly confirmed on the 4-hour. It's still above the 200-day moving average. The price went down today, but from a technical standpoint, nothing changed. It's really the same thing as Clover. Both of them were really red today, but none of the technicals really changed. It was just a red day in the market, and yeah. We'll see what happens tomorrow. Doc, nothing has changed at all on this one since I put out the alert or / idea. Still hidden bullish divergence developing, still in this upsloping channel, still right at the entry. Very slow mover, which is why it's a long-term idea. And that's really it. That's pretty much the recap from today. Anything else that I missed? No. Futures bounced up a little bit. Bitcoin's at 31,800. But yeah, I really hope the first half an hour of the stream was educational. I brought up a lot when I was talking about the overall market, and I also brought up a lot talking about Clover. But again, if you missed the beginning of the stream, it's like, you know, it's not a great time for my trades. Pretty much all the swings this week are red. But that's just how it goes. You can't be a perfect trader. You're gonna have your ups and your downs. And historically, we've had a couple other weeks that were this bad before, and those all were followed by major green weeks. I could probably bring up the sheet, but I'm not doing this for any other reason except education and just psychology. But this is the weekly sheet. This is public for everybody. I give the results of all the swings that I put out. Let's see if I could find some. Let me try and find like a really bad. All right, look at this red week over here. It wasn't really horrible, but it kind of was pretty red. All right, what happened the next week? Bunch of green, pretty flat, red again, bunch of green, bunch of green, red again, and then what happened? Green, look at that in a week. Obviously, they're ongoing swings, they can last multiple weeks, but look at that, right? So the weekly sheet right now looks nothing like this. It's pretty much all red. But again, most tickers, if we just go to this week's sheet, most tickers, it's pretty much all red this week, but it's not like the end of the world, right? We're talking about most things being down 4 or 5%. You know, the ARK ETF is down 10% this month almost. I don't know what it is now, but that's what it was yesterday. So, you know, if you look at the percentage win rate, it's very low. But again, if you have good risk management, none of the trades were like things that could kill your portfolio. They're just red for right now. But you can just have one really good week and make it back. That's what you got to think of as a trader. It's not just 1 week. 1 week is such a small little, I don't even know the word to use. It's such a small amount of your overall journey as a trader that when you do come around it just a horrible week like this week was for me, you just got to learn from it and eventually trust your plan, follow your plan, and weeks like this can come again, right? So yeah, appreciate all the support despite this horrible week. Just is what it is, you know, these types of week for the market when the Russell and the ARK are down a lot. Those are the worst types of week because I mainly swing trade mid caps and growth stocks, and those are what have been getting crushed the most this month. And that's just what it is. So, you know, like we talked about in the first 25 minutes of the stream, I'm seeing formations finally that, again, don't mean the small caps and mid caps are going to reverse like tomorrow. It just means it's going to be a lot easier to manage risk because we have a very clear demand line on the Russell 2000. And we also have a very clear level on the ARK ETF at 115, which it kind of bounced off of today. Went a little bit lower, on like 50 cents lower, and then had a pretty nice bounce there. So yeah, that's really the recap of today. thank you so much for all the support. You know, weeks like, you know, back in around May 10th, May 11th, when the NASDAQ corrected 9% in 2 weeks, there was like 10 people in the stream. A lot of people were complaining to me, sending me messages like, oh my gosh, how are things this bad? The market will do what it wants. You know, I think there's a quote, something along the lines of, the market is always right, the market always will show you the truth, and it's just your job as a trader to try and be on the good side. And you can't always be on the good side, it's all just probability. So, yeah, patience, preservation of capital, like Brentley just said, risk management, just keeping the losses small as long as you need to, playing defensive until things get good again for whatever your trading style is. And that's really the recap. This is actually going to be not only the final stream of the week, but the final stream before I go to Miami for a month. I'm still going to be streaming every weekday in Miami. I'm not going to be streaming on Sundays for the next month. I know I usually stream on Sundays, but for next month I will not be. I still will stream Monday to Thursday night at 9 p.m. EST. I might miss a couple days here and there if I'm doing something, but I'll try my best to always be live during the week. But there most likely will be shorter streams when I'm in Miami as well. So next month might not be the best for the streams. I'm going to still try and do as much as I can. But yeah, just vacation. Jay, who asked in the chat, just vacation. And yeah, so that's the recap from today. I know I had a lot to say. Hopefully you're not too bored, but I had a very similar stream to this one on May 11th, and that was down over here. Okay. So we'll see what all this turns into. Again, I'm not bullish on the NASDAQ in the short term, but I am thinking risk management is about to get a lot easier. And when risk management is easy is when my trading style can do the best. So hopefully we can get some good price action next week and the week after. But there still is a lot of more room to the downside should the bears continue to just take control. So just got to watch the levels, play around the levels, preserve your capital. And that's it. All right, that's the recap from today. Now let me look at the chat for a few minutes, relax for a little bit, and then we'll do ticker requests in 5 minutes. Don't drop any tickers just yet, though. All right. Barasan says, got a bail, finish the stream later. I don't know if you're still in the stream, but have a good one. Better Free says, very interesting with what's going on with the yields lately. Yeah, they've been dropping. What else? Yeah, a lot of new traders don't look at the dollar index. They don't look at the volatility index, the US 10-year bonds. They don't even look at the S&P and the NASDAQ. They just look at individual stocks. You have to start looking at the macro and paying attention, because if you were only looking at, let's say, Clover, and it looked bullish to you at $17, while all the other, you know, small caps and mid caps were pulling back, look what happened now, right? You know, pretty much most stocks have just been moving together for this whole entire week. You know, the sectors have been very, very correlated, right? This whole entire week, pretty much. Small caps and mid caps have been red. Large cap tech started off the week good. Now they've had 2 red days. You got to account for the overall market for sure, especially when things are a lot more volatile. There's going to be times where it's a stock picker's market. The indices are not moving that much, and you could just look for only look at the stocks. But in times like this, you have to be paying attention to not only the macro technicals, but the macro news, because there's a lot of news right now. JJ says, I'm a new trader. How important is it to understand yields for stock trading? Very important. It just also gives you a pretty easy sign of how people are feeling about, you know, longer term like rates on their potential return on their investments, right? So if you have, you know, a situation where the market's going down and yields are going up, people could be kind of feeling that they want to get into a little bit of a more defensive strategy. And there's so many different types of variations you can get with yields against the market. And I'm not a yields expert by any means. All I do is really look at this chart. I'm not even too familiar with exactly how they work. I know what they are, but definitely major driver in the market. Especially, I think it was back in like March when the S&P was at the bottom of the wedge. This was a major thing everybody was looking at, right? You know, the yields were going up nonstop, and the S&P had a very, very rough 2 weeks from the middle of February going into March. Make sure to hit that like button. We got 47 people in here on a red day. when my swings are having a horrible week. That's never happened before. Okay, the support this week has literally been insane. It's always hard when I'm losing money, the market is red, my trades are doing bad, and I'm getting hate or backlash because the overall market's red and apparently it's my fault. But this week, there's really been no backlash. It's been all support, and that's insane. So thank you so much, because it always does get a little bit, scary as like a streamer, that obviously my stream depends on stocks. When stocks aren't doing good, it gets me a little bit nervous, like, oh, I'm about to stream for like 10 people. People are going to dislike the stream. But this week, really appreciate the support. This community is so strong. It's amazing. Neutron Flux Lab says, what was interesting was that many charts with great TA were just invalidated and wrecked. Yeah, all the swings that I put out, I always try my best to find the highest quality setups, but all of that was invalidated. Like I always say, technicals do not mean anything if the overall market is not in the favor of what you're hoping for, right? If you're looking at bullish technicals on a bunch of stocks, but all the sectors are fundamentally bearish, or the sentiment around them for the short term is bearish, technicals do not overweigh buy and sell orders going into the books. What technicals can do is help you visualize what those buy and sell orders are creating as patterns, and those patterns can give you probability, right? That's what this all is about. There's so much misguidance around what technical analysis is. It's not fortune telling, it's not foolproof, it's just simply trying to increase your odds a little bit as a trader. Or not a little bit, but a pretty good amount. X-Ray Goggle says FTM till I die. Insert the mic emoji, says Cheddar Freeze. Brent says preservation of capital during stock market pullbacks is critical as a trader. You need to be ready with capital to take advantage. Yeah, so I always say you got to know when to play defensive and you got to know when to play aggressive. Right now it's more of a defensive situation. And yeah. Wow, I missed a lot of chats. I'm sorry, I'm just trying to read everything. Appreciate the 40 likes. Hit that subscribe button. If you're not in the Discord, join the Discord. The link's in the description. There's 1,800 other people that you can meet that are also traders. That's where I share all my ideas. That's where I give updates during the day. It's an amazing place. Just click a link and you're in it. Anybody can join. Appreciate that. FIFA Jesus says, enjoy Miami. I used to live in Miami for a few years, so it kind of feels like I'm going home. Let's go, Edison. Appreciate the subscription. Prince says, I traded during 2008 crash. Dow dropped from 14K to 6K. Everyone thought it's the end of the world. Now it's 34K. Yeah. What's that quote? It's not about timing the market. It's about time in the market, right? I go on the weekly and I scroll out. All the market does over time historically is go up. Yes, there's going to be the pullbacks. There's going to be the crashes. But for the last century, all the market has done over time is increase. And the trend is your friend. I'll always be a long-term bull on the market, because how can you not be, right? Sure, we might have a couple of rough years here and there, like we have seen in the past. But long-term, I'm just going to go with the probability in history. Yeah, it's crazy. And it definitely has started getting a little bit more nuclear ever since really 08, 09 financial crisis. Like, you could see things were still kind of choppy for like the mid 2000s, and then after the 09 crash, like, look how just parabolic things have gone. But yeah, while you were trading in 2008 crash, I was 6 years old. So I was watching SpongeBob. So Yellen and Powell are having a meeting tomorrow or something. Max says, when do you use mental stop versus hard stops? Do you get out and back in once you see a reverse based on technicals? I always personally use mental stops because I have no problem committing to losses. What I always say is, if you're having an issue stopping out of a trade when it's at your stop level, use a physical stop, because it'll just do it for you. You never want to be bag holding anything. So use a physical stop if you're having an issue committing to your losses. In terms of mental stops, if you have a pretty good ability to take losses when they're at levels where it kind of makes sense too. And mental stops are great because it prevents you from getting stop hunted. If you're in the Discord, you already know about this, but the way my personal way, it's not foolproof. It kind of does screw things over a little bit sometimes, but it has worked out quite well for me. Since I started trading, is waiting for candle closes. That's something I learned from Mitch Ray as well. Waiting for confirmation. For an example, what's like a good example? I don't even know if I can think of a good example right now, but let's look at Clover. Say we look at Clover in the pre-market on Clover. Clover was down 6 or 7% in the pre-market. It went down, I think, to like $8.20, right? If you would have stopped out there, you would have taken an even greater loss. However, if you would have just waited till the market opened, it gave you the ability to get out maybe at, sorry, let me go on the 4 hour. To get out maybe at 872, that was the high of the day. So if you wait for candle closes on like the 4 hour or the daily, it allows you to potentially not get stop hunted if something just literally drops to the stop and then bounces. But also, if it just keeps dropping, you need to have a secondary stop level, like a couple more percent under whatever your risk tolerance is to actually get out, because you don't want to say, oh, I'm waiting until the 4 hour candle closes to exit this trade, and then by the time the 4 hour candle closes, it's down another 10%. You don't want to be doing that. So typically the way I look at it is like, let's say I have a trade, it hits the stop level, I'm waiting for the 4 hour candle close, and let's say my stop was $7.97, right? So it just hit my stop loss and then bounced up. I didn't want to get stop hunted. So what I do is I give myself a secondary stop loss just until the 4 hour candle closes, right? So let's say there's 1 hour until the 4 hour candle closes. I'll say I'm going to lower my stop another 5 cents, okay, to 793. If it actually goes down to 793 before the 4 hour candle close, I'm just going to actually exit. I don't want to be down more than however many percent. If it bounces up before the 4 hour candle closes, then I take this out, and then it's the same thing. I look at that stop. If it gets stop hunted, I put on the lower stop for a little bit, and then it just bounces. So it just, again, it's not foolproof. Nothing in trading is foolproof, but it just helps me personally. It might not be good for you. It's just the way I do it. I wait for candle closes for more confirmation, and I just lower my stop losses by like cents until the candles do close. But again, none of that was financial advice. Do whatever makes sense for you. And then he also said, do you get out and back in stocks when you see it reverse? Yeah, if things change, I have no problem entering something, right? But you obviously don't want to try and force yourself to get back in anything. Mehdi says, thoughts on what they talked about on CNBC. They were debating on oil stocks because oil ran up so much, but apparently oil stocks themselves haven't moved nearly as much. Take a look at oil futures. Again, I'm not the best, how do I put this? I'm not super well versed in commodities and the fundamentals of commodity markets or external markets. So I really, the best thing I can do personally is just look at charts, and just really what I'm doing is, all I'm doing when I'm looking at charts is understanding how other people feel, right? When you're looking at a chart, you're just visualizing the psychology of everybody trading a stock, right? There is a reason why these patterns form. What is a double bottom, right? When you get a double bottom, that means not once but twice people wanted to buy a certain asset at a price, which is more confirmation that that is a level of demand. What is a double top? The opposite. So, looking at the oil chart, it's gone insane. I don't see much bearish divergence. The RSI is not overbought on the daily. The trend is bullish. I think anything above 66.50 on crude oil, and I do not know exactly what, I just looked up oil, so this might not be the best chart to look at, but I think as long as it holds this level, it looks fine to me. That's a pretty important historical level. It was a resistance in 2018, 2019, and March of this year, and it broke that level at the end of May. But in terms of like oil, I mean, everything in the economy right now is just up in the air. There's just so many factors going on. I don't like confusing myself and creating like a 300 slide presentation of why something is going to go up or down. I just look at levels on charts and I just react to what other people are doing, right? That's just how I go about things. It's not for everybody, but I just don't like, you know, trying to be the know-it-all of every single thing in the market, because there's always going to be something. There's always going to be concern. You know, in the beginning of the year, coming to 2021, everybody was worried about, you know, how are we going to replicate the movement we saw after the COVID crash. And then we had the whole entire, the yields going up in March. And then in May, we had to sell the news on tech. And now we're getting the inflation. And obviously we had the stimulus, and there's always going to be something. So I just like focusing on the charts, but also you have to understand at least what the macro is. You have to be looking at the news, because all those things do override the charts. That's what makes the candles move, right? So yeah. Mr. J Long says, I remember those red weeks and my mistakes. I learned, and this time around, I'm calm with no big losses thanks to Champion, the FTM was on. Yeah, absolutely. You know, even myself, I've definitely improved a lot at learning how to play more defensive compared to what, you know, I was doing earlier this year. Like literally this year, compared to, if anybody remembers, in the beginning of May, the sheet looked even worse than it does right now. So it's always just about trying to keep the losses small. I do agree with that you should always have a long-term portfolio, says Rooster. Again, not financial advice, but this is the S&P 500. Okay, not financial advice. That's it. But of course, we have to be smart about a long-term portfolio, cost averaging, fundamental analysis, trying your best to time things around catalysts and potential good valuation opportunities. There's just so much to it, man. I mean, trading is not buy low and sell high. It's a lot more than just buy low and sell high. You know, some people buy high and sell higher, right? That was, I don't know. I don't even know what I just said. That might have not made any sense, but all I'm really trying to say is, like, if you really, really want to be successful in trading, and I'm not the best trader in the world, but it's all about just learning. Education is the #1 tool you have in any craft in life. You just got to continue to learn. Is your favorite pattern hidden bullish divergence, says Rev? My favorite, I wouldn't say pattern, but indicator is just bullish divergence in general. Not, doesn't have to be hidden, it could be classic as well. I actually like this. You know, we're not really looking at tickers tonight. We're just kind of talking about things in the chat. I love streams like this, especially after looking at a red market all day. Sometimes I get tired of just looking at the charts. Talking to the chat's awesome, and we still have 45 people in here, which is amazing. Keep hitting that like button, hit that subscribe button if you haven't already. Appreciate all the support. Gold Miner says, do we think we can get to new highs on the next IWM bounce, or still range bound? That's not really how I kind of look at things. I just take it day by day. So, you know, assuming the IWM does bounce, just look for the next resistances, right? If it gets to a resistance and it breaks it, look for the next one. Breaks that, look for the next one. You know, there's just so many things that can happen, not only from a technical standpoint, but some news can come out between certain levels. So I don't know how big of a bounce we can get if we get a bounce, but I'll just be looking at the horizontal levels. Viva Jesus says, in your opinion, for somebody with a smaller portfolio, would you focus on swing trading and trying hitting home runs, or day trades? I mean, smaller portfolio is kind of subjective. If you're under 25K and you cannot day trade, I'd probably focus on swing trading. If you can day trade, if you're above 25K, I'd probably just do a mix. I think swing trading is, you know, the way I look at it, and a lot of people are probably going to disagree with this, I think swing trading is potentially the most skilled type of trading. I think it takes more skill to swing trade than it does to invest or to day trade. Most people would probably say day trading takes the most skill. I disagree with that. With swing trading, what you're trying to do is time potential pivots over weeks, right? If you're day trading, you're looking at things that are happening in real time. You don't have to worry about news that is 2 weeks out. So when you're day trading, it's very, very simple and straight to the point. You're just looking at levels and you play the levels. When you're long-term investing, again, look at the S&P 500. Historically, things will go up, right? Not every stock is going to go up, but most stocks that are good names, that have good fundamentals, go up over time. So investors, you know, there's a statistic where it's like 90% of investors make money over time and 90% of like traders lose money, right? Because with investing, it's all about just time in the market and obviously doing your fundamental analysis. With short-term trading, it's not just time in the market, it's to a certain extent trying to time the market, right? So I think swing trading takes the most skill, but I think swing trading has the most potential reward. Because in a day trade, you usually don't get the craziest types of moves unless you're trading very volatile tickers. And when you're long-term investing, it takes a lot of time to build up wealth, but then eventually can compound. With swing trading, you get the best of both worlds. It's kind of in the middle, right? So that's how I look at it. Rip Runners T says, does stop hunting actually happen using level 2? Yeah, definitely. A lot of sell walls and buy walls can affect stop hunts. And then also FIFA Jesus, Rooster did bring up this point, which is an important point. It just depends on you, depends on your risk tolerance. It depends on the time frame in which you're trying to make money. It depends on the amount of money you're trading with. It depends on what you like to trade. Like, you know, those are so many different factors. But again, if you ever, you know, want to learn more about trading, if you ever want to get other people's opinions on just how you can improve as a trader, join the Discord. The link's in the description. What else is in the chat? Sonny says, I used to buy high and sell low. Hopefully you're not doing that anymore. Thank you for dropping the Discord link in the chat, Cheddar Freeze. What's your personal most successful favorite pattern, not indicator? Favorite pattern? I'm not even going to use harmonics. Probably falling wedge. If I'm not including any oscillators or harmonics, and we're just talking about like Bolkowski patterns, probably a falling wedge. If anybody remembers the falling wedge on QS, you know what I'm talking about. Do you have a video on your TradingView setup? Yep, it's in the free course on my channel. It says, literally in the title, it says how to set up TradingView. Chatter Free says, this is a great stream, by the way. I agree. You know, market and the trades have not been doing well, but the stream's been amazing this week, which is definitely different from the past. We've had a lot of times before when the trades weren't doing so well and the market was red. The streams were also kind of like dead. But this week, despite everything that's been going on, the streams have been much, much better this week for sure. Ray 510 says, what ETF is best for investing? Again, it just depends on, you know, what you're looking for as an investor. There's so many different ETFs, like really, you know, if you're looking for more growth, I mean, ARK is definitely a kind of semi-newer one that could, I mean, it's been performing well over the past year apart from the last 2 weeks and the beginning of May, but for growth, ARK is a pretty good one, and they have a lot of different ETFs. I mean, overall, the S&P 500 is the standard index that most people compare their own portfolios to. So the S&P is probably the most popular and historically respected index, but you did say ETF. Obviously you have the SPY ETF for the S&P 500. You know, it's not really a question I can answer for you, unfortunately. There's so many different ones, whether you want to be exposed to financials or tech or newer stocks or growth, you know, just whatever you're interested in. Am I wearing a goat shirt? I think this is a ram, actually. Are rams goats? Let me look this up. I don't know much about animals. Are rams sheeps? No, that's not what I want to look up. Are rams goats? Are goats and rams related? Ram is basically a male sheep. It's different from a goat, and goats belong to two different families. I don't know. Maybe this. I think this is a ram. I don't know. It's a ram or a goat. What else? Any other questions or topics you want to talk about? I don't even know if we're going to do ticket requests tonight. Because again, like I said before, everything is just in pretty tight correlation right now with the overall market. And in my opinion, when things are so volatile, it's just the actual indices that make more sense to look at. But obviously, there's always going to be things doing their own thing. All right, Neutron has a question. I feel like this is going to be a joke, but we'll wait. Somebody asked about Tesla in the chat. It tested the 200-day moving average today. 628 is the strongest support. I mean, you also have the 200-day move. It didn't test it literally. It got kind of close. 636 is your 200-day moving average. I don't see much of any pattern on Tesla right now, honestly, or any divergence on high time frames. Maybe a little bit of hidden bullish divergence on the 1 hour chart. It's not super clear to me right now. Neutron Flux Lab says when markets cycle and you have stocks in that fund and it goes against the trend, when markets cycle and stocks in the fund. Okay. Is that retail or hedges with a different goal? Why does that question confuse me so much? When markets cycle and you have stocks in that fund and it goes against the trend, I don't even really understand that question. I don't know why. Maybe try and reword it or something. I'm still reading and I don't really, like, I don't know. Rip Runners T says, who do you think is controlling this market? Everybody is, you know? From a literal standpoint, literally everybody is. From a more metaphorical standpoint, look up Wyckoff talking about the composite operator. Okay, look that up. That's something. It's like an idea. It's not like a real. The composite operator is something that I think everybody should know, and everybody should kind of use as a guidance in trading. All right, so. All right. So Wyckoff proposed a device to help people understand price movements, which he dubbed the composite man, this imaginary figure that controls the markets. All right. All the fluctuations in the markets and all the various stocks should be studied as if they were the result of one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates stocks to your disadvantage if you do not understand the game as he plays it, but to your great profit if you do understand it. Okay? The composite man carefully plans, executes, and concludes his campaigns. The composite man attracts the public to buy stock which he has already accumulated a sizable position in. One must study individual stock charts with the purpose of judging the behavior of the stock and the motives of the large operators who dominate it. And with study and practice, one can follow the footsteps of the composite operator. Okay? So pretty similar to a market maker in a little bit of a figurative sense. But, you know, kind of, you know, looking at the market in a way as if we're all just watching some legendary manipulator move stocks up and down. Looking at the market that way allows you to kind of think a little bit more outside the box. It allows you to kind of think about the bigger picture. You know, it's a very important thing, especially even as a swing trader. You always want to look at the bigger picture, right? You want to come over to your charts, you want to zoom out, and you want to see the bigger picture. You know, what could be going on behind the scenes figuratively, you know? So yeah, look up a lot of Wyckoff's work, and then he also talks about how you can kind of look for these things on charts, such as accumulation and distribution and all of those things. All right. I am not the solo composite operator. Gold Miner says, so I know you said that the meme trade isn't your game, but do you think there's actually any legitimacy to their claim about synthetic shares in MOASS? I know nothing about that. I don't know if that relates to like naked shorting or anything, if that's what you're kind of trying to bring up. There's always going to be manipulation in the market to some extent. You know, there always will be. It's just, you know, when you have such a public market with so many variables within the market, there's people trading on inside information every single day. You know, there's people heavily shorting stocks with the purpose and vice versa. There's always going to be something going on. So I don't try and focus too much on all those little details. I just try and look at the bigger picture and look at the candles on charts, right? That's what I love about charting. It's like these markets can get so complicated if you try and focus on every single little article and, you know, piece of reference. But when you can just look at the charts, it summarizes everything for you. That's a good way to put it. It summarizes all of it, right? What's up, Medic 5? Sunny's asking about, do you have like tips in identifying when market makers or like the composite operator would be, you know, accumulating stocks? Look up Wyckoff accumulation schematics. That's a good point of reference. Also, higher highs and higher lows trend analysis is another way to kind of identify if something is being accumulated. Think about it. If a stock is making higher highs and higher lows, right? That means every time it goes up and it comes back down, there's not enough selling pressure to bring it back to the previous low, but there is enough buying pressure to bring it up even higher. All of this is psychology. You know, if people are willing to pay a higher amount for a stock in the short term on a dip than they were a couple of days or weeks ago, it shows that they believe the stock will go higher. Why would somebody buy stock after it's already gone up unless they believe it can go, wait, how did I word that? Why would you buy a stock after it goes up unless you believed it could go higher, right? So it's all just psychology. You know, every single one of these candles is people putting buy and sell orders into the market. They're all ticks. You know, these are things that Mark Douglas talks about in his lectures. If you go to the playlist on my channel, I put together a bunch of his lectures that are my favorites that you should watch. They really go into all of that. And I know I don't talk too much about fundamentals on my stream, and I have gotten backlash for that. But again, this is mainly a stream revolving around technical analysis, right? And that's what I mainly try to teach. It's my main focal point, but you always have to try and pair things, especially if you're going to be in a longer term position. So please, just because I'm placing so much importance on technicals and charting, that's not me telling you to not learn fundamental analysis. Definitely start looking at balance sheets, start learning about the markets overall. I'm definitely not a master in fundamentals, but I know enough currently to where I understand what most things are, but I'm not necessarily looking too deep into things, if that kind of makes sense, right? Neutron Flux Lab says, "You the best, brother. I'll have better questions when I get some notes together, and I'll get a ton of stuff scratched down and need to catch up on 2 streams. Out here killing it. Appreciate it." Sunny says, "I've seen stocks move up and down super gappy with no volume. Is that potentially a market maker messing them?" It could be. It could just be anybody with a lot of money moving a stock. Typically, though, with a low volume, like you said, it's a lot easier to see gaps, right? If there's not that many people trading each tick in the stock, you know, it's just basic supply and demand. If there is less overall supply and demand, the fluctuations can be a lot quicker, right? You know, on a low volume stock, buys have a lot more importance on the price. Same for the sells. I've not looked into long vertical spreads, Medi. We'll try and look into it. Casey says, "It sounds like for tomorrow you're mostly just observing the indices, not individual tickers." I'll be looking at a couple individual tickers. But yeah, for the most part, I'm just gonna be watching the indices. That's what I did today. Because right now, most stocks I'm seeing are just moving in the same exact way. I looked at, like, you know, in the morning, I try and do like a little bit of scanning, maybe look at, you know, 20, 30 tickers that were already on my watch list. This morning, like, I was looking at all of them. They were moving up at the same time, moving down at the same time. They were all doing the same thing for the most part. Obviously, some were moving a little bit higher and some moving a little bit lower. The percentage changes were different, but the timing of the bounces and the falls was like the same on everything. When I see that much correlation intraday, that tells me stocks are not moving necessarily because of their individual names and fundamentals and technicals. They're kind of just moving with the market. And when we're in those situations where there's very, very heavy correlation between stocks and their given sectors, that's when, for me, again, I don't like overcomplicating things. I'd rather just look at the bigger picture and let the ETFs and the indices summarize things for me until we see a little bit more of a stock pickers market. And again, that's not for everything. There probably was things that ran an insane amount today, even though it was a red day. It's just, you know, as a macro. I'm probably gonna end the stream soon. I was literally about to do ticker requests, but I started seeing questions in the chat. I started answering them, and we've just been doing that ever since. So instead of ticker requests tonight, looks like we just had a little bit of a fun chat, which I actually really do enjoy. We don't get to do this too much. Usually it's just me looking at charts, and especially with how volatile things are. Again, the technical probabilities are a little bit lower than they usually are because of, just like I said, the correlation. So sorry if you were here for ticker requests. I know I said in my tweet I was going to do them. I do them every single other night. So I think it's okay to take one night off. Maddie, you don't have to do timestamps for tonight. It's all good. Because that would probably be a nightmare. You'd have to like timestamp like every question, or I don't even know. But or if you want, just do like the first like 30 minutes of timestamps, because I did go over charts then. Like until I basically started just looking at the chat. I don't know, whatever you want. What else we got in the chat? Okay. The guy says, how do you know if you're in? Also, make sure to hit that like button and hit that subscribe button. I like saying that like every 20 minutes, so it just helps to grow the stream. You know, that's the main goal, obviously. The guy says, how do you know if you're practicing good risk management? Is there a certain percent you should be losing to gauge that? I think a good signal of if you're doing well with your risk management would typically be, you know, when things aren't going your way, are you losing, how do I put this? So I think a way to identify that you have a good risk management strategy is when things aren't going your way, you're losing less money than you're making when things are going your way, right? So that's why it's very important to have some sort of like a journal or something that tracks all your trades over time. And you always want to make sure, you know, collectively, when things are going against you, you're not losing more money than you're making when things are going in your favor. That's where the whole entire 3-to-1 reward to risk comes into play, that I learned primarily from Mitch Ray. That's obviously the very simple explanation, which you probably already do know, but I'm just saying that for other people in the chat. And in terms of like, is there a certain percent? Again, that's a very personal thing. It's probably different for everybody. And also might differ, you know, on different accounts that you have. Maybe your day trading account's a little bit more riskier than your long-term account, and so on. And then you said, I mean, other than sticking to the rules, can it be measured quantitatively? I'm not too sure about quant and everything. I mean, you know, I think trying to summarize things is definitely a good helper. That's probably the best answer I could try and give you. But also, another thing over time is you want to start trying to minimize your losses, right? So if we go look at the weekly sheet, right? Let me try and find like 2 of the worst weeks on this sheet. So we're just going to bring up this current week, which is, again, horrible. It's a nightmare, right? But you could see, you know, the win rate is horrible. It's probably like 1 for whatever, how many red ones there are. It's like nothing. There's no win rate on this week's sheet, right? But if you look at the percents, all of them are under a 10%. There was nothing over a 10% in terms of like a loss percentage. Let me try and find a horrible week. So that one, look at this, right? All of these were more than a 10% loss. This was about 3 months ago, I think. And try and find something else. Look at that. Look at all of these ones, right? So over time, you want to be putting yourself in a position where your horrible weeks are not as horrible as the ones before in terms of how much you're losing. You know, the win rate, you can't really, obviously you can always try and improve your win rate, but based on your strategy as a trader, your win rate should kind of be a little bit fixed. My win rate typically, what's the word to use? My win rate kind of differs between 65% to 75%. That's pretty much been my win rate since I started trading. Right now it is a little bit on the lower end of things. I think right now it's like at a 68%. Back in January, it was at like a 80%. So, you know, the March correction definitely took a huge toll on that. The beginning of May took a huge toll on that. The last 2 weeks have taken a toll on that. But again, collectively, it's not, and this is the biggest misconception in trading. People only focus on win rate. Win rate means nothing compared to risk management, right? Having the ability to lose little when you're losing and to win big when you're winning. That's why I really don't care. I could have a 50% win rate, but if my big trades are hitting, I don't care, right? Because on the half of trades I'm winning, I'm making way more money than on the half of trades I'm losing. So it's all about, you know, putting yourself in a position where you try and minimize the loss percentages and hopefully increase the win percentages, right? It's a mixture of the both, trying to win as many trades as possible, but also trying to maximize your profit, minimize your losses. So you're trying to do all that at the same time while correlating it to the market. That's when things can get a little bit tricky, and that's where all the education and experience has to come into play for you to potentially have weeks like this, which is the complete opposite of this week, right? But you know what I'm saying? Like we just had two pretty, why is it not loading? We just had 2 red weeks in a row, but one really good week can account for like 5 weeks of this, right? If you look at the percentage changes, right? So this week, if you add up all the percents over here, that's 76% in terms of losses collectively. We add up all this, that's 488%. This is almost 500%. Obviously, that's not a way to look at your trades, but I'm just saying if you put things together, you just got to maximize the good times, play aggressive, but don't be an idiot. Always manage your risk, but take when you have opportunities, take them. And when things aren't going in your favor, make sure you're not losing too much, right? So I know that wasn't exactly what you were looking for probably, but I kind of went into a little bit of a rant there just for education for everybody. Neutron says, I blew out 8 super perfect technical charts. They were perfect, but they blow up the overall market's trades and PL1 with it. Yeah, again, technicals work better when the sectors you're trading are doing better. Everything has a correlation. Everything. Oh yeah, the Discord message I sent, you're fired. Let me scroll up a little bit. Have a good one, Neutron. Brent says, market makers and hedge funds have many ways to attack retail trader psychology, break them down, use their friends, the media. I mean, again, I don't like getting too deep into that world, but yeah, there's always going to be, like I said earlier, some level of manipulation. Everybody at the end of the day in this market just wants to make money, and some people don't do it in a clean way. Yep, that's for sure. I mean, a lot of people have 90% win rates, and then you look at their percent gains and losses, and on their 90% of trades they're winning, they're only making like a few percent, and on the 10% of trades they're losing like 15-20%. It's like, it's really not about win rate at all. Win rate is definitely important. You want to be winning more trades than you're losing, but like I've said before, and this again is taken from Mitch Ray, if you have a 3-to-1 reward to risk on every single trade as a minimum, technically you could only win a third of your trades. You could have a 33% win rate and still be a profitable trader, because in the 1/3 of trades you're winning, you're making this huge amount of profit, and the 2/3 you're losing, you're only losing a little bit, right? And obviously, if you can win, 60-70% of your trades, and 60 to 70% of the time you're making this much profit, that really, it all adds up. Everything's correlated. All right, so I know we didn't do taker requests tonight. Again, like I said before, we just kind of drifted off into a different type of stream tonight. Again, I always do taker requests every other night, literally. So the next time I'm live, we'll do them for sure. And again, tomorrow, everything is just really kind of correlated with the market. So even if we look at a lot of things, that the overall market will probably just take a lot of more importance over, short-term technical setups until it doesn't, right? So I think this is going to be a great stream to just save forever. We could always refer people back to certain clips from the stream. I think it was a really, really good one. TV Repairman. All right, what ticker do you want me to look at, TV Repairman? And then we got somebody complaining because I try and do something different for one night. Give me your ticker, I'll look at your ticker. I try my best to just have a good stream. I'll wait a couple more minutes. Literally, I'll just wait just for you to look at your tickers. I don't know if he left or not, but yeah, but I didn't want to end the stream like that. Again, we're just trying to have fun. We look at tickers every single night. Still no message. Yeah, we literally have a Discord too where anybody could ask for any takers and 1,800 people could help you out. So I hope everybody except whoever that was enjoyed the stream tonight. Try to do something a little bit different. Hopefully it was a good time. I try my best. Every other day I'll be live and I'll be doing taker requests. So if you have the patience to wait a few more days until next week, because the market's going to be open forever, then I'll see you then and we'll do taker requests then. Otherwise, good luck trading tomorrow. Thank you for coming out to the stream. Thank you for all the support. Seriously. Hit that subscribe button if you didn't already. Hit that like button if you didn't already. And yeah, thank you for all the support. Like really, it's been very, very awesome to see the support this week despite how other things have been going. So have a good one, everyone. Join the Discord, links in the description, and peace out.